Hello again. Thank you so much for watching. Today we'll be discussing how to overcome any objection when you're selling a loan. But before we get started, if you please hit that subscribe button and the notification bell, it does help us a lot in those YouTube algorithms. And also, if you're a commercial mortgage broker and you haven't already done so, check out our Patreon. A lot of exclusive content there that helps our commercial mortgage brokers get to the next level. Now let's jump on into it. There's a few phases to every deal. But when it comes to overcoming objections, ultimately, it comes down to your preparation. So in preparing yourself to overcome objections, there are two phases here, at least two that I've broken down here. Number one is the discovery phase. So discovery has to do with getting to know the borrower, getting to know why they came to you. So the discovery is all about asking questions. Why did the borrower come to you, for example? This is the first question you always want to ask. Borrower, why are you talking to me? What's the reason why you're coming to me, a commercial mortgage broker? Why haven't you already talked to your bank? What is the reason why you're facing me right now and talking to me? What are the other options you've explored? So I'm assuming you have explored other options. Now, why is it that you're finally falling into working with a commercial broker instead of other lenders? What options have you explored? What are you willing to explore? What's the urgency in the deal? How soon do we have to close? Is this a very urgent loan? Do you have to close right away, or do we have some time? Now, the reason why I'm going over just some of these questions, these are just examples of questions you should be asking. Now, the whole idea in overcoming objections is just being prepared to overcome the objection in the first place. Now, if you're not asking these discovery questions, there's no way for you to be able to overcome any objection, whether it's on the rate or whether it's about the term or the closing time or the fees or anything that has to do with your loan. There's no way you can overcome any of those objections unless you first get to know what the answers are beforehand. I don't know if you've ever heard of like how a lawyer goes into interrogating somebody that's on the stage, right? The number one rule is they never ask a question they don't already know the answer to. And the reason why, and it's the same principle comes into handy right here when you're overcoming objections. You'll never have to be afraid of an objection that a borrower has for you if you already know the answer to the objection. And those answers come to this initial discovery stage. They come from the initial discovery stage of understanding the deal and asking enough questions up front to make sure you're prepared to face objections in the future. So here are a few more examples of questions you should be asking. Why do they need the money? What's the need? If you don't know the need, then how are you supposed to know how to overcome that objection in the future? The borrower comes up to you later on and says, oh, this loan just isn't a good fit for me. And then you come back and say, well, I thought you needed this money for A, B, and C. Have you weighed the cost? The cost of the money versus the opportunity you have of missing out on that money. What is the cost reward here for you, borrower? Why do you need the money? How much do you have to put down on the deal? If you don't have very much to put down, if the borrower comes back and is complaining about the percent that they do have to put down, you can say, well, you told me in the beginning that you had this much to put down. So why is it now a problem that you can't put that money down now, right? A few other questions. What are they expecting? What kind of terms are they expecting? If you don't already know what types of terms they're expecting, then you're not going to be able to set the expectations, which takes me to the next point we're going to get into. But ultimately, these are just examples of questions, but you should always be asking deeper questions. So whenever you find the answer to these questions, like what other options have you explored, your next question should always be why? Why did you explore those options? Or what is your urgency? And then you can say, and if they answer their urgency is urgent or not urgent, you can ask why. Why is it not so urgent that you refinance? Why are you talking to me if it's not very urgent? So always be asking deeper questions. Now, phase two is laying the groundwork. So when you're you can overcome any objection if you first understand the deal, which is that discovery phase we just came out of. Then the next phase is just laying the groundwork. After you understand all the deal and all the questions, you have answers to all those, Your next step should always be to give your unbiased opinion. And you always, use that word, borrower, this is my unbiased opinion of where you stand and the next steps you should be taking. That's a very, very professional way of going about running your consultant or advisory service, your commercial mortgage brokering service, is giving your unbiased opinion of where they sit. And if your opinion means that they should not be talking to you and they should go talk to a bank, then that's great. That's a great thing to say to a borrower. You've just gained their trust for the next deal. If your unbiased opinion is based on the information they've told you, they don't qualify for a conventional mortgage, or they don't qualify for the loan they're looking for, but you do have a better idea of what they qualify for, then that's your unbiased opinion. You want to tell them where you think they should go based on your experience. So this is just laying the groundwork. So when you get objections later on, maybe they come back to you and say, hey, why did I just paid for an appraisal and all that? Well, then you can say, well, I gave you my unbiased opinion at the beginning of where you stand, where you should go, and you made your own decision on where you wanted to go. So this is where we're at. And then the next phase, giving your unbiased opinion, is setting the stage to setting the expectations. So you're laying the groundwork to overcome the objections in the future. So if you set expectations for the borrower up front, so they understand what they're getting into, if they have objections, for example, of the rate, then you can come back at them and say, hey, I set your expectation at the beginning. This is what the rate was going to be. So they can't have any, that interest rate objection, for example, if you quote the rate accurately up front, isn't going to be a problem for you in the future. So anyway, setting the expectation is very important. Can you do the deal? That has to do with your unbiased opinion. What is best for them? What ultimately is best for them? Setting their expectations on what is best for you, borrower, based on what I know is this. Now, setting expectations, like I was saying, with the rates, if you set the expectation with the rates, the terms, the fees, that means upfront they've agreed that, yes, I understand where the rates and fees and all that are going to be. That means later on, they can't throw that objection at you. And if they do, you can say, borrower, I set your expectations. There shouldn't be any issue here. There shouldn't be any reason why you shouldn't move forward with this deal, because you've laid the groundwork. And then finally, you do need to set their expectations on what they'll need to close. For example, like this is like the underwriting guidelines. Borrower, upfront, you want to say this upfront. Okay, after you've just done the discovery stage, you've set their expectations on rates, fees, what you can do for them. And if they say yes, 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 then finally, this is what you're going to need to close. Can you provide me A, B, and C documents? Can you provide me a FICO score of 650 or whatever it is? And so on. There's other underwriting guidelines depending on what program you're going to place them in. But ultimately here, if you want to overcome any objection, it all has to do with laying that groundwork up front, going into a discovery stage, understanding the deal fully. Then based on your understanding, you lay that groundwork. And in the future, overcoming objections is easy because you understand the borrower's needs, you understand, and they understand you. They understand what you are going to provide for them. So objections are nothing. There is no objections ultimately because everything's been set up front. So at this point, what objection can't you overcome? You know everything about the deal. We already talked about this. The borrower already agreed up front. You set the expectations. What's there to be afraid of? Thank you so much for watching, guys. If you haven't already, smash that like button. Helps me a lot. And also, we have our Patreon. If you are a commercial mortgage broker or you're looking at getting into it, a lot of exclusive content there that helps our brokers do what they do. Thank you so much. We'll see you in the next video.